Our new strategy, exhaust in reverse, is long out of the gate, hit its profit target on the first trade, it's in on a second trade. And so this is the new strategy for the 100K and $1 million portfolio. We have the special offer for an annual lease if you don't have one of those portfolios for $350 per year. Tomorrow that goes up to $495, so usually have a special offer on new strategies. And you can see all the results in each of the platforms, TradeStation and Trader 7 and 8 and multi-charts. And so that's the strategy, that our latest release on a strategy. You see other trades. Tick Pulse is also long. Exhaust in reverse got long before the day session opened at 8:45 Eastern, and Tick Pulse is long here. It's up about 5 points. Crude oil weekly inventories and crude oil gap fill in reverse are offsetting each other with a short and long position, and no other trades so far today. For the March trade, it's March 1. I see 3 potential scenarios for this market, and these are long-term scenarios. As short-term traders, we still look at long-term scenarios to determine short-term patterns, and there's 3 potential scenarios. Continued melt up, which we're in today as it continues in March 1. Oftentimes the first day of the month can be a head fake, and so it could reverse tomorrow. It could turn into a momentum bull market like the late 90s at some point, where those that are sitting on the sidelines want a part of this bull market and they can't stand it anymore. There's people waiting for a pullback, and it goes higher, and so emotions come in, and then people jump in, and so those can sometimes create momentum bull markets. It could turn into a bear market, and so I don't see a scenario for that happening, but we don't usually see that in advance. Fundamentally, sometimes you see it technically first, and usually the bear market happens, and then we know why, and it's usually quick. And so we have strategies to take advantage of all of these conditions. A fourth scenario, you might say, what about a sideways market? To me, a sideways market is a continued melt up. We don't short a dull market. If a market goes up, makes new highs, and goes sideways, it's part of that melt up action. And so we continue to use strategies like exhaust and reverse, because sideways markets will have dips and then rallies into the previous day's close, and so maybe it doesn't make any new highs, but you can still trade counter trend as the market returns to previous day's closes, and the bull market remains in effect even in a sideways market. So we have strategies that work to trade all of these scenarios, and that is the update for March 1 trade.